I'm very concerned about the most recently available data on job openings and job hires. As you probably know, there's 6 million open jobs in America right now, and yet job hire numbers are falling. I hear about this from Nebraska businesses every week when I'm home, the difficulty they have in finding and retaining talent. What do you think the most prominent causes are of the mismatch between job openings and job seekers right now?
So it is commonly the case that with an unemployment rate as low as we have now, that many employers would have vacancies and regard them and report that they're hard to fill. In fact, the fraction of firms reporting that jobs are hard to fill is, in a way, an alternative to the unemployment rate as a measure of labor market slack. So with a 4.4% unemployment rate, you should expect that there would be many firms that would find this. That said, I agree that there is job mismatch, that there are kinds of jobs that firms have had a good deal of difficulty in filling. I often, when I'm asked about productivity growth and problems in the labor market, talk about the importance of worker training programs, education. We routinely hear that there are jobs, for example, in manufacturing, but ones that require skills that those who are losing jobs don't have. And I've often, when I travel, look at programs that have been devised in different parts of the country to try to enable workers who are having a tough time finding jobs, fill the jobs that are available. And I've seen examples of nonprofits partnering with state and local government and with local businesses, community colleges, to put in place programs that are linked to job opportunities that fill that gap with a tight labor market. I hear many more firms telling me that they are doing their own training, putting in place and expanding training programs to try to fill these vacancies.
Thank you for that. I'm trying to get my hands around, though, whether or not we think this is a new normal and somehow economic growth is going to solve this problem, or whether or not we have a set of cultural issues or institutional issues around mid-career job retraining in particular. So Nick Eberstadt at American Enterprise Institute has data that shows that prime age male labor force participation rates have been declining for over 40 years. Yes. We've gone from 25 to 55-year-old males non-participating in a seemingly quasi-voluntary way from about 4% 40 years ago to pushing 15% today, I believe. Do you think this is a new normal?
Well, we've had many decades of declining labor force participation by prime age men. And I think this reflects a whole variety of adverse trends related particularly to technological change that's eliminated many middle-income jobs, those that can be replaced by technology, combined with global outsourcing and production. And the individuals that have lost those jobs have found it difficult to acquire the skills necessary to be reintegrated into the labor market. And many individuals with less education are finding it difficult to be placed in jobs that are middle-income jobs. And so this perhaps intensified during the recession, but it is a much longer-lasting trend. And, you know, we've seen now, unfortunately, this is likely tied to the opioid crisis. It's tied to the problems that many communities have, we've even seen an increase in death rates due to deaths of despair, suicide, drugs.
Pardon me jumping
these
in.
communities, and so this is a very serious matter.
I think there are social maladies all around this that would be valuable to unpack with your input. If we had longer rounds, I would also ask you some questions about the new multi-career economy that we're inevitably headed toward, and the fact that this institution is not at all nimble or prepared to think about what mid-career job retraining institutionalization looks like. But before I'm out of time, I want to ask you just one question on trade. Corn exports from the U.S. to Mexico have fallen 7% just in the last 5 months. Obviously, Mexico has been exploring other trading partners. There's an attempt on Mexico's part to turn from the U.S. toward Brazil for certain grains and other commodities. Do you think that the U.S. rhetoric around increasingly protectionist tone is having a direct effect now on people trying to pre-negotiate other trading partners? And do you have historical examples of moments like this where we're not yet in a trade war, but we seem to be speaking in a way that implies we might go there, and we're already seeing effects on certain agricultural commodities and exports?
I am going to pass, if you don't mind, on this question.
I mind a little bit.
I think this is, you know, this is a matter that's well outside the domain of monetary policy and really is a matter for Congress and the administration.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.